Welcome back to the Edge series. This is a series of videos where I talk about the trading edge that I use today. And today's topic is order flow. Just remember, this video is for educational purposes only. You can read the rest of this disclaimer. And also, this video is one of several that are part of the series. If you haven't watched the other videos, it's important because they are in sequential order. And so to really have a good context of the overall framework that I use and where order flow fits in that framework, visit the playlist here, take a look at some of the prior videos, and just look at them sequentially until you get back here to order flow. Now, if you've watched the other videos, you've seen this slide over and over and over again. You've heard me talk about it. The framework I'm using is called NADRO. It was developed by Merritt Black at Apteros Trading, and it stands for Narrative, Acceptance, Developing Value, Rhythm, and Order Flow. Obviously, today we're talking about order flow. This is why it's important to go back and look at the other videos, because you get an overall understanding of the framework as a whole. And that's really important because narrative, at the highest level, I can't execute trades against the high level narrative. Narrative just tells me, what's happened in the market, what does the market fail to do, what's it tried to do, where are key lines in the sand, right? It's these other components too that build on one another to get me to be able to access trade ideas that come from narrative. Order flow is the final thing in the process, and it's used to help me really pinpoint execution of trade ideas. Now, I will say this too about order flow and how I use order flow today. If you've looked at my videos in the past, order flow was the system. That's no longer the case. Order flow is not my system. My approach is NADRO. Order flow is the way that I access trades and executions that are based on a narrative idea. Okay? And it's the last thing I look at. It's not even the first thing I look at. And sometimes I ignore it because I have such a good narrative, and I've got acceptance and developing value and rhythm, like everything's in place. But order flow, I'm okay ignoring order flow. Okay, it doesn't happen a lot, but sometimes I do. And so just keep that in mind that where I've transitioned is really the inverse of where I was, where order flow was the first thing to look at. Order flow is now the last thing I look at. All right, what is order flow? Order flow is the analysis of how trades flow during the auction process. And what's really important about order flow is that it measures both the active and passive trading participants in the market, not just active. So a lot of times, there are tools that we think of that, I want to see the active trades that are happening, but some of the subtleties that happen in the market are really what the passive players are doing. When you see buyers absorb in a particular area, that kind of has some significance. And so we want to be able to use tools that give us both a look at both the active things that are happening, how aggressive players are coming in to the market, as well as the passive players. Okay. Now, there are 3 different tools that I use, and this is why I'll break up the videos a little bit. The first tool is called Cumulative Delta. And the next tool is footprint charts. And the last tool is Auction Vista. And this is a little bit different, again, from what you've seen in the past, where I was pretty heavy looking at the DOM, and I used Auction Vista. So, if you looked at any of my prior videos on Auction Vista, there's not much that's changed there, but I will go through it. But Cumulative Delta and Footprint are 2 tools that I use that I found to be really helpful in timing order entries and executing, for me, as precise as I can entries when a narrative type of trade sets up. Cumulative Delta helps me to see really a macro picture of order flow. I can also use it to kind of look at these micro turns that are happening. I'll show you an example. Footprint allows me to see turn patterns. And so there's a specific pattern I look for in footprint charts, and it gives me a level of fidelity. So if you think of like high fidelity, like really being able to see detail, I get that with footprint chart. Auction Vista, obviously, I think we all, if you're familiar with Auction Vista, this is like Bookmap. They're they're very similar tools. So if you're a bookmap user, you can relate to Auction Vista. This gives me depth. It also helps me to see where aggressive players are coming in too. And obviously, I'd love to see when there's both depth and aggressive players coming in at the same spot. So I'll talk more about that one. But today, we're just going to talk about cumulative delta. So cumulative delta measures the cumulative net volume of aggressive trades. And so that's important. Its actual measurement is the measurement of aggressive trades. So what you're seeing the difference of aggressive buyers from aggressive sellers, and bar by bar, the cumulative number of that. So, so let's say bar 1, you have 100 more aggressive buyers than sellers, then your cumulative delta value would be 100. If in bar 2 you actually had 50 more aggressive sellers than aggressive buyers, then your cumulative delta would be 100 minus 50. So your cumulative delta would come down to 50, right? And so it just keeps going bar after bar after bar and builds this cumulative number. So that's why I mentioned, like, it gives you a good macro view of order flow and what's happening with order flow. But you can also look at it in a more narrow time frame and bar by bar and see some really interesting things in cumulative delta. You can actually see passive buyers in cumulative delta. So even though it's a measurement of aggressive trades, you can see when one side is being more passive and absorbing a lot of volume. And that's actually really helpful because you can see it over a course of several bars versus, sometimes when I was looking at the DOM, I would get, kind of hard to see how a general area was absorbing. And so you see that with cumulative delta. You can see how a whole area is getting absorption, and you get a lot of passive absorption. Now, I'm not going to give a really thorough review or tutorial on cumulative delta and how cumulative delta works. I kind of gave you the basics of what it is and kind of how it works. Here's a really good video. I like these guys at Axia Futures. They make really good educational videos. This is a great video on cumulative delta and how it works and some of the intricacies and nuances and examples. So check out this video if you want to dive into it a bit more. Obviously, there's some other good content on YouTube, but this one I recommend. And just remember, we're going to try to stay high level and look at cumulative delta from the perspective of how do I access trades with it, not a whole tutorial on everything you can do with cumulative delta. Okay, so let's just kind of look at what cumulative delta is. So cumulative delta is this section, basically right here on my chart. So, and this is actually where I keep it on my chart. I keep it just below my price data. So if this is ES above, this is my cumulative delta for ES below. And there's some important things that I have here on cumulative delta. So first of all, I have a zero line right here. I want to know if I have a net positive or net negative cumulative delta. That's helpful. And then I also have kind of these major key areas. Here's like 5,000, 10,000. Tends to be kind of important. Same thing on the other side too, on the negative side, minus 5,000, minus 10,000. Then it comes up here to 20,000. When you start to get above 10K or below 10K or below negative 10K, you've got some pretty strong volume that's built up for the session. All right, so let's take a look at this June 30th, 2022 example, which I think is a really fantastic example because there's so much of different capabilities of cumulative delta that are shown in just this one 2-hour time frame. It's pretty crazy. Now let's just try to get an understanding of the narrative here and what's happening. So we are rotational here. So this is the market open. And before the market opens, we're rotational. Why are we rotational? Because we're really contained inside wherever this I don't know where the top developing value area is, but we're definitely contained within developing value area. This is VWAP right here. Anytime you're moving around VWAP, you're kind of in this neutral area. And what happens though is we push out of this neutral area and I've got some support for a down move. I've got this tool that I talked about before. This is my RSI with trend tool. We have this break of developing value area low where we come down and then we start to come back up. Right about here is when I'm saying, okay, hey, I think it's time to look for some potential shorts. And so how can I use cumulative delta to help me look for shorts? Well, there's a few things. First, I want to know, how has the bear order flow been to support this particular move? So if you look at this move down, like what happened with order flow? Well, we have this move here. That's pretty fantastic. So we have this very strong move from 5,000 down to 10,000, or negative 5,000 to negative 10,000. And so we have this strong order flow move that supports the actual price move that happens as well. That's good news. So that's my first indication that a short is probably pretty reasonable here. And that was a pretty strong move. And then how do I get in? Well, there's a few things that I'm going to be looking for. One in particular in a move like this is I want to see bears come back in after a pullback. So as I'm looking at this pullback here, right, I want to make sure that I'm not coming in when the cumulative delta is still positive. I want to look for stuff like this. Maybe not the first one, maybe the second one, right? And this is where we get into order flow and Auction Vista to really time this well. But at a minimum, I need to see that the bears start to come back in. And they do. They start to come back in right up through here, okay? Which is perfect because it's right along where my developing value area low level is. So for me, I'm already feeling pretty good. Let's say that you took this trade and you got in short. Now, there's something really disturbing that happens with cumulative delta. It's kind of a warning sign. So notice that we had this move here and we had this move here. And if you think about basic price action, we had this pullback here and we had this move here. Great. That's a nice two-legged move, right? Well, we would expect order flow to have the same nice two-legged move. We'd expect this to come up and then we expect this to come down just like this. And that is not at all what happened. What happened was we basically flatlined right here from an order flow perspective. So while the bears were able to bring this all the way down, from an order flow perspective, the bears did absolutely nothing. It's almost like the bulls just stepped aside, said, "Oh, come on down. Come on down. We're good. You can come have this location. It's no problem." Right? That's a little bit of a concern where you saw all this aggressiveness and you saw no aggressiveness on this next leg down. And not to mention, we're also down by this, negative 10,000 mark, which tends to be a relatively important number. So this isn't necessarily something to get me out of a trade. It certainly would give me pause to take another trade, like right up around here. And it would certainly give me pause on how, or at least have me, consider how tightly I manage the trade. So if I were in somewhere here, right, if price comes back up to here, I'm probably, unless I see some really good selling coming in, I'm going to be really wary of, waiting anything out for it to come back up and thinking it might come back down. Okay. So the other thing that happens, which is, really kind of cool, is you have this change in net delta. So when delta goes from net negative to net positive, right, that could be a confirming factor for taking a move in the opposite direction. So again, everything has to, going back to NADRO, everything has to support what we've talked about, the narrative, acceptance, developing value, right? So when we look at this from just a purely NADRO perspective, right, here's our developing value area. Okay, we come back here, we come up, okay, and right about here, we can say, hey, we're now rotational, we're back rotational. So we went from kind of this downward bias to a rotational bias, which means, and since we're newly rotational, I can probably look for something anywhere around here to go back up to this upper developing value area. Okay, so now let's say I'm stalking along based on that idea of narrative and acceptance. Okay, how do I get in? Well, one thing that's really cool that happens here is notice that we have this really strong bull move, right? This is really good buying that comes in here on this. And then as the bears bring this down, again, the bears flatline, absolutely flatline. But not only are they flatlining, they're flatlining right around this 0 line, okay? And the bulls start to come in. And notice the bulls are coming in even while price is just doing this stuff right here. So this is a good area. Anywhere here is a really good area to start looking to get long and building your long position, because you've got bulls that are coming in, and you've got bulls coming in after we've had a fresh change from net negative delta to net positive delta. Okay, so just a really, really good example there as well. The other thing that we have that we didn't talk about earlier is we have the concept of divergence. And I want to introduce that, and I have another example of divergence that I'll show. But divergence is any time where when price makes an extreme, but your tool does not show an extreme. And the reason I say tools, because divergence can be used with RSI, MACD, stochastics, like a ton of other indicators. It can also be used with cumulative delta. So in this case, remember, as we're going down, and also divergence is very often seen as a reversal pattern. Now, as we see here, we make a new low. So we have kind of a swing low here. We have this move, and we make a new low, right? Now, again, what we would expect is we would expect a move up and a move down to make a new low, but that doesn't happen. What we actually get is we get a divergence pattern, okay? So a divergence pattern occurs when you have a new low in price, but a higher low in your tool that you're measuring, in this case, cumulative delta. And the same thing would work for on the bull side. So if you have, you know, a higher high on the bull side, right, but you have a higher low or lower high on your tool side, right, that would be a divergence pattern on the bull side, right? So this one chart is really great because it shows several capabilities of cumulative delta in a very short space of time, and in just kind of one whole kind of morning session, which is really cool. One of the things that cumulative delta can show us is when there's dissonance on the delta versus the price, that one of the great things that cumulative delta can show us is when we have dissonance between order flow and price. And what I mean by that is if you have a day where price keeps going up, 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 but the delta keeps going down, 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 there's some dissonance there. That's called absorption. That's when the buyers are much more passive and being able to push price up passively versus aggressively hitting in. And you get the inverse of that too, when you can have price going down and order flow going up. And so on days like this, you have really what I guess the best term for it is daily absorption. It's where one side is absorbing all of the aggressiveness of the other side and able to keep pushing price up through depth of market movements. It's just basically raising the bid, or, you know, moving the bid or the ask in the direction that they want. And you can see this on May 17th, 2022. This is a decent example. It's not the best example, but it's one from, you know, our recent past, which is what I was aiming for, is just get something pretty close to where this video is being made. So here's an example where clearly we're in an uptrend. Price is going up. We actually had this really nice strong price movement here. We're not getting the same equivalent price movement. In fact, we're kind of coming down here in a bear move on the delta. And so you can see this divergence, or not this divergence, but this dissonance that's happening where you've got bullish price movement and bearish delta movement. Now, days like this, I don't use cumulative delta as heavily. I have to rely on footprint and auction vista a little bit more, but it does clue me in on how to use those tools differently. So for instance, when I'm looking at a pullback, I'm not necessarily looking for bulls to hit back in aggressively. I might be looking for bears to aggressively move price down and then get absorbed. So I might look for stronger depth areas on the auction vista that sellers push into and look for those areas to enter instead of waiting for the bulls to come in on cumulative delta. So it does change my tactics a little bit, but overall I don't use cumulative delta, or I don't tend to use it on days like this because it's just a little bit wonky. Okay, now when cumulative delta is normal, so when I say normal, I mean it's just generally tracking about the same as price. So the same rhythm that price has, you see that same rhythm on cumulative delta. Then when you're looking for trade, you're stalking trades, then you can use cumulative delta on these really kind of micro turns. So in this example, right here, let's say that we're using just a very basic rule that we want to be short below our developing value area. So we've kind of come down here, right? So we've accepted below, come back down. So we're looking for, okay, when can we make a turn here? When do the sellers start to come in? Well, there's a couple times they start to come in here, they start to come in here, and they start to come in here. And that corresponds just nicely with right here and right here and obviously right here. Any of these opportunities, this one's a little bit short. Really what I'd want to see is I'd want to see excess. So this would probably be my first shot going short right here. As soon as I start to see the bears come back in, I love seeing that. That didn't work. And so, I'd probably want to see another attempt, another break above this right here, and then another attempt in this one. And again, bears come in. And what's nice about that, notice that we have a little bit of a micro divergence pattern here. So we've got a higher high, but not on our cumulative delta down here. We were just pretty much flat. That's a great spot to enter right here because you get a little bit of a divergence pattern too to give you confirmation. Okay, you can do it again here, right? You might be able to do it. This isn't a very strong, I wouldn't kind of say that's a very strong order flow, but the bull's pushing this up and then this nice little pattern here, right? So you can see how, as you're looking at, opportunities to turn, you can wait and look and make sure that the bears are coming in before you take a trade, a short trade. And then I also like to look at when price crosses zero, the zero line. That's kind of an important thing that happens when you have kind of a net change in cumulative delta. So here's a really good example from June 28th. You have, the bulls made this nice move up, and then they come down, and then they start crashing down here. Okay, and you might think, hey, maybe the bulls are going to pause right here, and they're going to kind of go back up. But what we have is we kind of have this breach of the zero line. Okay, not a trade, right? But the fact that they come back up into here, right here, and they're still kind of right here in that zero line, just almost bouncing off of it as if the zero line is providing resistance right there. And that's kind of a pretty, this is definitely a pretty strong indication that the sellers have taken control. Okay, so anything now at this point, you can look for shorts. So again, what do you want to look for? You want to look for the bears coming back in, maybe a nice excess pattern, a little spring pattern happens right here on this trade here. So now that we've kind of crossed this zero line right here, we know that the bears have taken control over the market, and so we can start looking for shorts. So just gives you that extra bit of assurance that you're on the right side of who the aggressors are coming in, and that we don't have major passive buyers coming in to disrupt what the aggressors are trying to do. Okay, and I already talked about divergence, but I just want to emphasize divergence again because it's such a great pattern to look for, particularly with fade trades. So, when I'm looking at fades, kind of extreme fade type trades, For me, that's one of the hardest psychological trades to take. And so I really like to have good confirmation. And seeing divergence in both RSI and order flow for me is a really strong confirmation for some of these trades. So just here's a really good example. Now let me just talk about the context here. So obviously, from here, we've gone rotational. So we're basically kind of going back and forth in this zone here, right? This is our developing value area. And so the idea is that you want to take shorts, below this area here, and longs, at or above this area here. Okay. And so, taking something like this doesn't make sense because you're still kind of in the middle of value, right? I mean, this is a beautiful setup. This is okay here. Even this maybe. But the question is, when's the best time to get into some of these? So using divergence here as an example, you can see a clear pattern where right here, we've got a new low formed. So we have this swing here, and then we have this new low form, kind of a swing low. And what you would expect on order flow is you would have expected, so here's where that swing was, this to come up and then this to come down here, right? Because that would be normal order flow. But that doesn't happen. You only get this tiny little move right here, which means that either sellers were weak or more likely buyers were absorbing the selling behavior. And that's exactly what happened. So, when you see a pattern like this and you see order flow, the bear is coming down like this and hardly any order flow associated with that. It's all you get right here. Then that's a very strong divergence pattern. So looking for trades anywhere in here with the idea that we're going to at least go back and test back to this other side would be a really good risk reward type of trade. And divergence helps to increase the probability of that. So that is cumulative delta in a nutshell. Again, I didn't want to make this a very thorough, all about cumulative delta and everything you need to know about cumulative delta. This just gives you the basics and how I look at it. I look for, one is, do I have a normal macro, regular type of rhythmic movement of my cumulative delta as I do with my price? If not, how do I handle my entries? What am I looking for? Because if I have strong absorption on the other side, what do I look for now? When I'm looking to get into a trade, do the sellers or buyers come in at the areas that I would expect or want to look for a good risk reward trade? And are there any divergence patterns that I know could help me to, take a trade, particularly a fade trade? And then finally, who has overall control? Who has the net control of the market, the bulls or the bears? So that's kind of how I look at order flow and how I use it. Just those kind of big, higher level questions that I'm asking myself when I'm looking at cumulative delta during the day. So that's it for cumulative delta. And next time we'll talk about footprint. Until then, happy trading.